YouTube day trading gurus are freaking ridiculous. Henry over here aims for 10% returns on a good day and 8x's his portfolio every year with minimal risk. And Marcus may place between 200 to 250 trades per day when, quote, conditions are favorable. If you're throwing money around like a Saudi prince, then sure, you'll have some 10% up days. But you're going to have plenty of margin calls too, so we know Henry is full of shit. In Marcus, the market is only open for 390 minutes per day. If you're really placing 250 trades per day, that's a trade every 90 seconds for 6.5 hours. So that's also bullshit, and it sounds like a terrible time even if it were true. The point is, if you meet anyone promising you a consistent 10% return per day, or a rapid-fire day of trading so you can feel like a real Wall Street trader, that person is advertising a paid course. They're all a bunch of con men, and they make more money selling their courses than they do trading. But what's my point here? Why did I spend the first minute of this video shitting on fake gurus? I'm doing it because I know that short-term trading is hard as hell, which is why the vast majority of traders lose money. But that doesn't mean it cannot be done. It just can't be done with the day trading guru method. In my Theta Gang 3K challenge, I'm putting my skills to the test and attempting to grow a small $3,000 portfolio using Theta Gang strategies, and once in a while, some significant risk taking. In the first 2 episodes this season, I had some solid returns of 13.4% by wheeling TQQQ and GameStop. At the end of last week, the charts were flashing some bearish indicators, and I'm entering the new week with an out-of-the-money SPY put. That's a much riskier trade than I'd normally take, but this time I'm confident in it. And as we get started with this week's episode, I'd like to thank the Daily Upside for sponsoring this video. I start my morning each trading day with TDU's newsletter on all things stock market, and I enjoy their industry deep dives every Sunday. It's all 100% free. Click the link in the description to learn more. And now, without further ado, let's get rolling. The market just opened on Monday and stocks are beginning the day with a big pullback, so I'm really glad I opened this SPY put on Friday. A lot of loyal YouTube commenters didn't like this trade. They felt like it was too much risk and a call credit spread would have been better, but I felt really strongly that we would gap down into this week. Even our Theta Gang champion Tom Sosnoff over at Tasty Trade says there's a time and place to buy options, and for me, Friday was one of them. And look, it's already SPY down 1.2% in the opening minute. This is a larger gap down than I even expected, and my 413 put already more than doubled from 122 to 255. I could end the episode right here and still consider this 3.4% gain a success for the week. But now is not the time to pull out prematurely, but rather to reduce some risk and then capitalize on the strong start. So I'm going to open the SPY options chain to my expiration on Friday and sell my 413 put for about $255. That's a gain of $133, or 115%. But I definitely don't want to close my bearish position. I think there is still more red coming this week, so I will now buy the 408 put for $124. This will result in still having a long put, but by selling the 413 for $133 gain, and then using 124 of it to buy another put, I have effectively locked in a gain and insulated myself from any losses if the market recovers. In exchange, I gave up some delta by rolling my put strike down. If SPY continues down like I expect, then I won't make quite as much as if I just held the 413. But this is my trade-off, and I'm happy to make it. Alright, that order executed right away, and there we are filled, up a couple dollars already. Now I have $3,700 in cash because I closed my TQQQ wheel last week without getting assigned, so I want to put this money into play. However, my 2-year-old is going to absolutely kick my ass if I don't cook her breakfast immediately.
Food,
so let's
please.
feed the beast and then come back after breakfast. Okay, the child is fed and now watching Baby Groot for the 30th time, so I've got a few minutes. While I was cooking, I was thinking about if I should wheel TQQQ or GameStop this week. I think TQQQ will outlive GameStop's volatility over the long term, but right now, I'm expecting more decline this week. The SPY put that I opened an hour ago is already up 25%, and I expect even more. It doesn't make sense to sell a TQQQ cash secured put when I expect the market to decline. So I'm going to posture some of this cash against GameStop instead. GameStop is down over 5% to $34.62 today, down 11.5% for the week. This isn't great news, but the higher volatility should allow me to sell a put for a nice thick premium, and I think buyers are going to start getting interested again at this price. So let's open the options chain to this Friday, and I have to decide, do I want to sell the $34 put for $161 or the $33 put for $115? Both are out of the money and reasonable choices, but I'm going to elect the $33 strike. I want to sell the option with the lower chance of being assigned, mainly because I want the increased flexibility to return to TQQQ at the end of the week if the market's decline appears to have slowed. I'm fine taking GameStop at 34, but I want that flexibility. And for me, that's worth the $46 difference in premium. So I'll sell this $33 put, and I'll ask $120 for it, which is right inside the bid-ask spread. And that will make my break even $31.80. And very quickly I'm filled. This nice low strike means I've got over $500 left in cash, and I'm very happy with my positions at the start of the week. Let's take a break and check back in later in the week. Yesterday, that's Tuesday, was the most boring market ever. But now here we are on Wednesday, and the market is starting to recover from Monday's huge gap down. With my out-of-the-money SPY put, I can't profit off a flat or rising market. I'm still doing okay for the week, although I did expect more decline, and that doesn't seem to be happening. I already locked in a $123 gain before, and I used it to buy this put. But the longer I hold it, the more of the profit from the steep decline on Monday is getting eaten up as the market flattens. Already I gave back $25, and this won't turn around unless the market dumps again. Look at the theta on my SPY put. This theta is at negative 56, which means the contract will lose at least $56 each day that the market doesn't decline. Since this position is bear gang, this theta means $56 a day will come out of my account straight into some theta gangster's account, and I don't want to mess with that. So I'm going to make the painful decision to roll down my put further and thus lock in a gain without completely taking off my bearish slant, just in case JPow tanks the market with his speech on Friday. I will sell this 408 put for $99 or $100, and then I will come down to buy the 400 strike for $14. That will seal in about $85 of gains on the SPY put play. My alternative to this would have been to hold the 408 put and sell a further out of the money put. In that case, I would be rolling into a put debit spread, but doing that is basically the same thing as what I'm doing right now. If I had exited my 413 put completely on Monday, I would have actually been better off. But if anyone is able to call tops and bottoms with that much precision, let me know and I'll get you on the channel. This $400 put is worth $14 right now, but it will very likely expire worthless. The only reason I'm rolling into it at all is because we've got JPow on Friday, and we've seen massive volatility during his speeches. If SPY starts dumping, I'll take the increase from Vega and a ditch, and hopefully scrape off a little bit of extra value. But most likely, I'm burning $15, and I'll close right after JPow on Friday if there's no big movement and recover whatever little premium is left. Alright, that's done, profit's locked. Other than that, my GameStop cash secured put is still in play. I'm okay with assignment at 33, so I'll hold this through Friday and sell covered calls if I get assigned next week. Alright, so things did not go according to plan here at the end of the week. JPow just got done talking and gave some mixed messages. It sounds like he wants to get a little bit more dovish, but he's concerned about leaving the job half done. And he basically said that his plan to fight inflation is recession, so that should work out nicely. The market initially took it well because this wasn't a huge surprise, but now it's starting to dump again, back down to 411 on SPY. It looks like it wants to keep dropping, but we need to lose another more than 2% for my 400 put to be in play. We're not going to drop 4% on this JPow speech. We're probably not even going to drop 3%, so that position is dead. I dumped my 400 put on SPY for $1, which means my total gain on SPY puts for this week will be a modest $86. That gain is the equivalent as if I had held my original 413 put until SPY 411, which is where it is right now. So whether I sold now or did all that rolling around nonsense, the result ended up being the same. But it's not all good news. My GameStop position suffered some this week, and the premium for selling the put will not compensate for the loss. Unless there's some real serious end of the day turnaround, I'll take the assignment at $33, and my basis after factoring in premium collected will be $31.80. I'll anticipate selling covered calls at the $32 strike starting next week, and I'll look for some rearmed apes to get back in the buying game to drive this thing back up. Overall, it looks like I'll at best break even this week despite a strong start. I'll hold out for some end of day turnaround and I'll check back in a little bit. Okay, well this kind of sucks. Here we are minutes before market close on Friday. My watch list is obviously pretty deep in the red. Look at the Dow, down almost 1,000 points. I mean, are we going to hit 1,000 today? We got time. We might as well hit it at this point. SPY is down to 405.70. TQQQ down near $30 again. I'm trying not to think of my original 413 SPY put because there's no way I would have held it this long, and Robinhood would have auto-closed me an hour ago anyway. But if I did hold, that position would be worth over $700 now for a gain of about $550. Instead, I have 86. But if I flip over to Robinhood, you'll see my losses aren't quite as steep as the rest of the market, but still really ugly on account of this GameStop short put. I'll take assignment at 33, and I'll start the position about $81 in the hole. Balance this out with my $86 gain on SPY puts, and I'm up only $5, minus whatever I lost on shares. I'm sure it's an overall small loss. That $4,000 ceiling is proving pretty tough to puncture. Right there on Monday morning when I said I could close right now and call this a successful week, well, maybe I should have done that. Or maybe I should have gone with those call credit spreads after all. Maybe those guys were right. But I think my error this week was taking on 2 risky plays. I was supposed to only be trading 1 big position at a time, but instead I had a meme stock and a long put. This was overdoing it a little bit, and unfortunately I've got nothing to show for it. On the bright side, I'm up 19% in a month, but this is a damaging setback for sure. If you look closely, you can see I'm right back to where I was last Friday. I guess I'll have to be happy with flat while the market is sharply down. It's not really what I had in mind about outperforming the S&P, but I'll have to take what I can get. This is normally the part where I reinvest my gains, but since there are no gains, I'm not going to use any of my cash right now. I was also reminded that my daughter Becky was supposed to pick a stock for me this week, but I'm going to be real, I just forgot about that. So Becky will pick a stock for me next week. I'll see you there where we'll find out if Becky can trade better than her dad. See you next time.